You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. Welcome to the show, Hilliard.
Nice to be on the show again.
Bank of Canada cut its rate to 0.5%. Is that going to make any difference when you go to renew a mortgage?
I don't know about that, but I think that what's happened is Canadians are reaching the limit, if they haven't already reached it, of the amount of debt that they can pile on. And there's not just a housing bubble in Canada, but there's a debt bubble as well. And the Bank of Canada gets into a position where they're doing what is called pushing on a string, where they try to push more money into the system and push it into the funnel. But unless there's somebody standing at the other end trying to take the money out, it just doesn't work.
I know when they were making their comments, it was pointed out to them, you've made 2 cuts, but the banks didn't give consumers that entire break. They decided to keep some of it as profit.
No, and part of that is I saw a chart yesterday of the net interest margin for the banks over the last 20 years, and the net interest margin has been shrinking steadily for 20 years now. So they're getting to the point where on this, especially on the mortgage business with the insurance, the CMHC insurance, that the margins are getting very thin. And so they're happy to do that business. They get great leverage off of it because they don't have to keep any capital against insured mortgages. But the spread between what they pay on deposits and what they put the money out on mortgages is getting so thin now that they're probably starting to wonder if it's worth it.
Do you think people are going to run out and buy a house if they can save another 0.15%? I
don't think it'll make any difference, but I'm amazed. I see the latest numbers came out from TerraNet National Bank Housing Price Index, and they're showing like 5% gains year over year, and even higher gains than that in Toronto and Vancouver. So, at some point this thing the bubble will burst, but it hasn't burst yet. Now, part of the problem is that the TerraNet National Bank Index only records sales based on the actual sale price registered at land titles, and that often is 5 months, 6 months after the fact. So we probably won't see it showing up in that index right away, but I know in Edmonton, Calgary, the prices have already softened quite a bit.
Is anything going to soften the prices in Vancouver and Toronto?
I'm beginning to wonder if they're ever going to go down, but that's what happens at the end of bubbles. You get this frothy activity and stories about house flipping and all that, and it reminds me of the dotcom bubble in 2000 when Nortel, you'd come into work in December, Nortel would be $20, and you come into work in January, it'd be $40, and by March it was $124, but that was the peak. So in the last few months of a bubble, you get the most rapid price increases at that time. And of course, the prices have gone way beyond what people can afford. So unless we get a whole new flood of new foreign buyers coming into Vancouver and Toronto, which is possible, but it's unlikely, at some point the prices will start to correct.
Well, how big of a factor are foreign buyers? I've heard that it's between 3 and 5%.
Yeah, I would expect that that's the numbers, but I was just talking to a client today, and he said, well, in his neighborhood, there's been a 2 houses that have sat empty for 2 years, owned by residents of China, and this is in Edmonton. This isn't Vancouver. This is Edmonton, and they're just happy to hang on to them. They don't rent them out. They don't do anything. Nobody lives there. They just own them as an investment. So, but things that hasn't been talked about much with the foreign buyers is obviously there are people that have some money in their home country, but they may also be borrowing against the real estate. And there's a huge real estate bubble in China, as you probably know, and people may be borrowing against that real estate in order to be able to buy the Vancouver real estate. So there is a serious slowdown happening in China, and that may eventually affect Vancouver as well.
Well, the Chinese government announced their GDP is actually higher than they expected for the first half of the year, but can you trust the numbers that the Chinese government generates?
So it's July the 15th today, and the quarter that they're talking about ended 15 days ago, June 30th. So in Canada, the way it works is we won't get that number till September 1st. It takes 60 days to calculate the GDP, but somehow in China they're able to calculate it in 15 days. with a much bigger population, much more rudimentary information gathering. So obviously they're picking a number. I don't know if it's an accurate number, but I think the more important thing is, I'm guessing this is the way it works in China because I'm not an expert on China, but it used to be 8% was always the magic number. Now it's become 7%. I think some of us thought maybe they might ratchet it down a little bit lower. So, but the direction is towards a slowdown. Whether the actual number is 7 or 5 or 4 or whatever it is doesn't really matter. The government's signaling that the slowdown is happening, and there's all kinds of other anecdotal evidence that the slowdown is quite a bit. The growth rate is quite a bit lower than 7%.
Well, the Shanghai Exchange that had gained 100% over the past year lost a third of it. Are they in danger of losing another third?
Well, it's interesting because the way the math works, if somebody goes up 100% over a year, which as you point out correctly, it only has to go down to 50% to get back to where it started. And so I think they're still higher than they were a year ago, but they're not a whole lot higher. And you wonder about the speculators that have jumped into it as to what their staying power is. Now, I understand that a third of the stocks are still halted. They haven't reopened them yet. So, but there's anything's possible in the stock market, especially because these are not long-term buy and hold players. These are speculators that are buying stocks. And one of the stories, and again I don't know because I'm not an expert on China. But one of the stories is real estate has flattened, and so they're moving their speculative urges onto the stock market away from real estate. But in the end, real estate is much, much more important than the stock market as far as China goes. 90% of the Chinese people own at least one property, whereas the participation in the stock market is very, very small. I
had no idea a communist state would have so many property owners.
And it's interesting, in the Communist Party regulations, you don't actually own the property. You have a lease, which I think is like 30 years or something like that. But of course, the Communist Party could decide tomorrow that they need that land for a road or a highway or an airport or something, and they decide at their total discretion what your compensation would be for that land. And you can appeal, but they call the shots. They don't operate under rule of law there. They operate under the laws as interpreted by the government and represented by the Communist Party of China. So, everybody owns real estate there. I think they're optimistic about the value, but they also worry that the Communist Party could take their land away from them at any moment without and they'd have no appeal in the courts like we would here. And that's why they're buying real estate in Canada and in the United States and in Australia, because they want to have something else that's a little bit more secure.
Right, you actually own it, and if they do take the land away from you for a highway project, you get market value. I mean, I've seen the pictures in China when they have a major development of one homeowner sitting on a little tiny island surrounded by a huge excavation because they won't give up their home. They're bringing food and water up by buckets. The locals support them, but they know in the long run the government isn't going to let them sit there.
Yeah, and in Canada we have that expropriation power, but there has to be and I suppose there is in China too. There's a valid reason, but they don't have the property ownership rights that say the United States would have. And actually, our rates in Canada are a little bit not quite as strong as the United States as well, because all of our property we own in the right of the Crown, which is, obviously the Crown recognizes your right to own the property, but it's still subject to that. And but in China, I think it's very much at the whim of the local government and the Communist Party, and I'm surprised that they are so confident in putting so much money into real estate. But then on the other hand, as we just said, they also are scared and they want to get some money out of China because they don't know when it's going to fall apart.
We'll have more with Hilliard MacBeth right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. Well, Hilliard, what I'm wondering with the new NDP government in Alberta, are we seeing any changes in the way people invest there? Are they scared to invest in Alberta? Are they taking their money out? What's happening that you've seen?
Well, so far there hasn't been any concrete news that I'm aware of. I have talked to a couple of older oil and gas executives and large owners of oil and gas properties who have said that they're going to pull their money out. But, really, I don't think there's been a lot of that on a widespread basis. They probably were going to pull their money out anyway because the price of oil is down to $50, and the NDP is just the excuse. However, they have constituted this panel, well, at least they named the head of the panel, Dave Mowat, who used to be, by the way, the head of the Van City Credit Union, and then a few years ago he came to Alberta to be head of the Alberta Treasury Branch, which is a government Crown Corporation bank. This is an odd thing for a free enterprise province like Alberta, but that started in the 1930s. So he's the head of that, and he's been asked to head up the royalty review panel for the NDP government. I imagine they picked him because he came from Vancouver. Just kidding. But he had the background in the credit union, so he probably has more understanding of the politics of it than people that would be from the oil patch in Alberta. But it's an odd thing, really, to have a group of people trying to do the royalty review, and he's actually recruiting members for the panel. And I haven't seen any announcement that he's got a single member yet to go on the royalty review panel. And I haven't talked to anybody who's been asked to go on the royalty review panel, so it'd be interesting to see who he's able to recruit to go on that panel. And I don't know, there was a press conference, and they asked him, well, what are the parameters of the review, and who's going to be on the panel, and he didn't have answers for any of that. So it was a very difficult press conference, because every question that he was asked, this was about 3 weeks ago, he didn't have any answers for it. So you get the impression that this royalty review is a campaign promise that the NDP government felt they had to do, but I don't know if anything's going to come of it. And it's not. The timing for raising royalties are probably too low. It seems to be what the case is, but the timing would be terrible to raise them now. So I suspect the review will take longer, and it'll be it'll be kind of shuffled off for a year or two. It's not something that's going to happen right away.
You don't want to do something that scares away investors who are shy in the first place.
Well, there isn't. The Bank of Canada announcement today, they said that, and they probably have information that we didn't have yet. They said they had forecasts previously. The Bank of Canada's forecast was that there would be a 30% drop in the oil and gas investments in Canada, which is mostly Alberta, but some Saskatchewan and some in BC. And instead, they were surprised that it was down 40%. Well, I wasn't surprised it was down 40%. And but they had forecast 30%. So that was the one thing that they mentioned as a surprise, why the economy was weaker than they expected. And, unless the oil price were to rebound up to $80, $90 fairly quickly, I don't expect that investment's going to come back, no matter what the royalty review panel does.
Well, Saudi Arabia has just opened up the taps even more, and Iran's about to come online.
Yeah, and those two countries are bitter rivals, and it'll be interesting to see what happens, because Iran, will feel that they've been offline for quite a while now, and I'm sure they've been selling some oil, but they've had to do it secretly to get around the sanctions. But now they'll be able to up their quota, and they'll feel that it's their right to sell more for a while to get back the volume that they missed out on. But I don't suppose the Saudis are going to back off either. So it's a very volatile situation. And at the same time, we hear from the U.S. that the shale people have gotten their costs even lower, are able to make it work even at current prices. So it's a little bit worrisome for Alberta oil and gas people, because it seems like all over the world these factors are against us right now.
Who would have predicted 5 years ago we'd be looking at a glut of oil?
I've had a chart in my slide deck for a couple of years when we started noticing the U.S. oil pricing, oil volume and production increasing. But we never thought that it would. I don't think anybody could have possibly foreseen that it would come to this, where there's just oil everywhere. And one of the big surprises was China's demand hasn't been increasing. So they've been able to continue to grow their economy without increasing their usage of oil. It's not nearly as much anyway as people thought it would be.
Well, I think China too is really encouraging electric cars because of their massive air pollution problem.
And they're a leader in solar panels, and I wouldn't be surprised if fairly soon they become a leader in wind turbines as well. But they're doing it as an industrial production effort in order to become. They are the world leader now in producing solar panels, and they've got the price down by 90% as to what it was 3 or 4 years ago. And they may be able to do the same thing with wind too. I don't know, but so obviously if they can produce them at home, they'd be happy to use them as well. They're still burning a lot of coal, but the projections a while ago are going to be totally wrong. I think it's going to be a complete shock that China is much less of a user of carbon-based fuels than we thought.
And of course, BC is hanging a lot of LNG hopes on that. And there's also criticism of the deal that they signed that will limit royalties and taxes for 25 years on an LNG project. But somebody pointed out to me, at least you're guaranteed something will be happening for 25 years. Everybody else doesn't know what's going to happen next year. It's
very competitive now, and that's another thing that's changed so drastically, even in the last 2 years. There's so many LNG projects all around the world, and BC, I think, is forced to make some concessions because, if you look at where Australia is, they've got some huge projects that they're coming online in LNG, and they're much closer to the market than BC is. So BC's got the problem of having to ship it from northeastern BC or northwestern Alberta, which costs money to get it to the coast, and then they have to move it thousands of miles further than the Australian producers do. So they're going to have to sharpen their pencil a little bit, I suspect.
I understand the Northwest Territories government says it's making progress on talks to put a pipeline up the Mackenzie Valley. In other words, ship the oil north and forget about trying to get it through BC because there's just so much opposition. Is that going to be realistic?
That could happen. I was reading about, I'm actually reading a book. I forget the name of it, but it's, the gist of the book is about the changes in the economy worldwide that are coming from clean energy. And one of the things, one of the chapters was about how if the northern Arctic becomes ice-free for longer periods, there'll be tremendous savings in how much time it takes to move goods from, say, Europe to China or the east coast of the United States to Japan. It's much, much shorter than going all the way down through the Panama Canal. So if you could take the oil up through the Mackenzie Valley and then out that way, I imagine that's much cheaper than, or natural gas even, that's much cheaper than taking it all the way across BC through the mountains of BC.
And they don't have millions.
You and I talked before about some of that stuff and why Shell was drilling up there, and maybe Shell's figured out that with the temperature increase, they're going to be able to ship more easily from the Arctic.
And of course, too, if they start shipping through the Arctic, that means ports like Vancouver will get less business.
Yeah, I was just out in Vancouver last week, I guess, in the middle of the smoke there, and it's still beautiful. But I was looking out from Cole Harbour across there, and I was trying to imagine a tripling of the Trans Mountain Pipeline. And and the big tankers coming in, and I just couldn't visualize it. I don't know if it's ever going to happen. Maybe there's another way. I'm not sure exactly where the terminal is for that oil pipeline, but if they triple the capacity, which is what the proposal is, they're going to have much bigger tankers, and I don't know how they're going to load them, unload them, and that sort of thing. I guess load them.
Well, don't forget the federal government closed the Kitsilano Coast Guard base too, the busiest Coast Guard base in Canada. Look, they've had oil tankers hit the Golden Gate Bridge in San Francisco. What if one of those super tankers plowed into the Lions Gate Bridge? They have all of a Zodiac staffed by students in the summertime to respond. In the wintertime, there is no response. Because the hovercraft that we still have is not allowed to respond to oil spills.
I was wondering, as I was driving across the Lionsgate Bridge, why is it only 3 lanes? But I guess that's another topic for that's probably a huge
They could have made it bigger, but they didn't want to dig a tunnel through Stanley Park because they might have to knock down a couple of trees. Of course.
Is that it?
Yeah.
Oh my goodness, because it just seems like such an anachronism that it's only three lanes, and
they could have added lanes on the outside of the bridge. They've done it in New Zealand. Japanese company did it. They call it the Nippon Clip-On.
Yeah.
So the engineering will is there, but they said they didn't want to do a cut and cover through Stanley Park. Of course, when they were talking about having to take out 50 trees, a few weeks later, there was a storm that took out 10,000 trees in Stanley Park. So really, they could have done the project and no one would have noticed.
No one would have known by now. The furor would have died down.
And the smart thing to do, I've heard, is actually build a tunnel under Burrard Inlet and run SkyTrain through it. And that would be the most efficient way to move people. Forget about making the bridge bigger.
Well, you wonder, that's a good point. You wonder if all of us sitting in these automobiles by ourselves going back and forth really makes any sense. Like there's got to be a better way to do it. It takes up a lot of room. And then you get downtown and then they got to be parked and it's very expensive. So did you hear the new name for our downtown arena district in Edmonton is going to be the Ice District?
Really?
That's the name they picked.
The Ice District. Well, I know what they say about Edmonton: 9 months of winter, 3 months of poor skating.
I guess they could have called it the Frozen North District, but
the Great White North.
Yeah.
Karuka-koo-koo-koo-koo-koo. Hilliard, always fun talking to you. We'll stay in touch.
Thanks a lot, Jim.
My guest has been Hilliard MacBeth, CEO of the MacBeth Group in Edmonton and author of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. You can forward comments about the show to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.